Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka.
Hello there, and I'm Yatin Mota.
Well, Yatin, you seem to be in a festive mood, but the mood on the Lal Street is fairly somber, right? No fireworks really. Yesterday, of course, we saw a 300-point up move from the day's low. We shut shop above that 24,400 mark. Today as well, there were feeble attempts at recovery, but that didn't really come by, and we saw a triple-digit cut coming in on the Nifty. Shed somewhere around 120 points. 24,340 is where we ended the day. But the good part is that the broader end of the market saw good traction. If you look at the advance decline ratio, that was almost 3:1 on NSE. So good traction in the broader end of the market. Small cap index, mind you, gained somewhere around 1% or thereabouts. Nifty Bank came under a fair bit of selling pressure, Yatin, today after the 1,000-point up move that it saw yesterday. Aside of that, banks, PSU banks also, I think, were in a spot of bother today after 2 days of gains, which saw 7% uptick on the index. Today, IT, Pharma, these were some of the other pockets that were under pressure. But what held out was the FMCG pack, almost 1% kind of gains coming in there. In terms of individual movers, Yatin, Adani Enterprises, Tata Consumer, Hero, Britannia, Maruti, beaten down stocks saw some bit of buying interest. Maruti for one. IndusInd Bank also, saw some buying interest after the kind of drubbing it saw post its earnings. So yes, some bargain hunting happening in some of the beaten down stocks. But on the flip side, Cipla extended its fall. Yesterday as well, it was down 3 to 4%. Today as well, on the back of weak outlook for the US business, I think that stock continues to reel under pressure. Shriram Finance, good set of numbers, and stock was up and about yesterday. Today saw some bit of selling pressure. Life insurers continue to witness selling pressure, and Trent also off late has been under selling pressure, and today as well. And some of the IT names like Infosys were also under pressure. But broader end of the markets were very buoyant today, right? Railway stocks were also doing well today.
Yeah, and Nandita, as you mentioned, 3:1, the advance decline ratio was good. Both the mid cap and the small cap index on NSE were higher in trade. In fact, the small cap index surged almost 1%. So, a bounce or a momentum coming in for the mid caps. Yesterday also was the same scenario. Markets being volatile, but I think the mid cap end of the market was witnessing some bit of buying. Now, if you look at railway stocks, yes, there was buying in it. In fact, Concor posted the numbers, and the Concall, the shares went up 4%, so good move coming in there. Stocks like Poonawalla Finance, Action Construction, all of these stocks bouncing nearly 10% in trade. Stocks like Reddington, IRFC, IFCI, RVNL also moving in trade. So the PSU lot, especially the railway stocks, were doing well in trade. What was not doing well is MCX. That was a top F&O loser, 6% down for that stock. Dixon Technologies, post the results, the stock continues to remain weak, 5% down for that name. Five Star Finance and Halimet Automation post the numbers, saw cuts of nearly 8 to 10%. So yes, the mid cap end of the market slightly weak, but stocks like Gillette, Crisil, UTI, AMC, Polymedicure continue to make new 52-week highs. In fact, Polymedi post the numbers and talk to CNBC TV 18 that they will be able to maintain their growth guidance, led the stock moving almost 8% higher in trade today.
Well, those were all the movers and shakers, but even the FMCG pack, as I mentioned, was in focus after good set of numbers coming in from Marico. That stock was up somewhere around 6% at one point in time, cooled off from the day's high, but nevertheless ended higher by about 4% or thereabouts. And even Dabur reported numbers, right, a few minutes ago. The numbers were largely in line with what was being expected. But let's talk about Marico. Good numbers, the profit jumped somewhere around 20%, managed to beat expectations. Margin and revenue were largely in line with estimates, but the rise in profitability was aided by price hikes, right? That was undertaken to mitigate the impact of higher input costs or raw material costs. EBITDA was also up 5%, margins 19.6% vis-a-vis 20.1%, but that was largely in line with what the expectations had thrown up. Rural demand continues to outpace urban demand. That's another trend that was witnessed. But this company was fairly, immune to that, given the fact that it caters to mass segment as well as premium segment. So the slowdown in urban consumption didn't really impact Marico that much. Looking at the internals then, Parachute, coconut oil and international business, these are the segments that led growth for the company. Parachute, which is the largest segment by domestic revenue, grew by 4% in volume terms and 10% in value terms. Looking look at Saffola, that also reported positive value growth for the first time in 2 years. In fact, the revenue for Saffola also grew 2% on the back of price hikes that were undertaken. The food revenue also grew 28%. In fact, the revenue run rate in the food segment has been of somewhere around 1,000 crore rupees. Bangladesh also grew by 8%, and the management has said that it expects double-digit momentum to continue here, although it is looking to reduce its exposure in Bangladesh. At the same time, that it is looking to diversify its top-line growth from by increasing market share in other geographies like Middle East as well as North Africa. These two areas have led to exponential growth in the second quarter. The management has also said that the company is on track to deliver volume-led target revenue growth in double digits in the second half of FY25, although moderate margin contraction of 40 to 50 basis points can be expected due to input cost pressure. But the company, or the stock rather, is back on Jefferies' top buy list. They have a buy call, target price raised to 800 from 780. They've said that with inflation coming back, Marico will see revenue growth accelerating, but margins could come under slight pressure. Outlook for growth on both the near term as well as medium term remains buoyant, according to Jefferies. On the other hand, Nomura has also pointed out that it has a buy call, target price at 760, and the growth outlook, according to Nomura, is buoyant on the back of price hikes. In the second half, Parachute is expected to undertake a 10% price hike along with mid-single-digit volume growth and market share gains. I also want to point out that in terms of volume growth, Marico saw a 5% volume growth, which was above expectations. Expectations were ranging from 4 to 5%, so it was at the upper end of the expectations. And even international business grew at 13% in CC revenue terms, the volume growth. Saffola will also implement a 15% price hike from the second half, and that will have minimum backlash in the volume. That's what Nomura has to say. But looking at the stock, it has been under pressure for the last 1 month, but also want to point out, over the last decade, the stock has given negative returns in only one calendar year. Aside from that, if you look at all the other years, 9 years, it has given positive returns.
Absolutely. And Marico, clearly on the back of rural demand, momentum, most of these FMCG companies are doing well. But what was also doing well from the day's low was Voltas. Post the numbers, the stock saw 6-7% gash. But post the conference call and the management assurance to investors that demand has picked up, good move coming in, we saw the stock recover in trade. In fact, if you look at the conference call of Voltas, they say that the demand has picked up in a very strong way, especially in the Navratri to Diwali period. 1 day before the Diwali period, which is 2 days back, the total demand growth was nearly 18 to 20% according to the management, and the room AC segment saw 25% growth. Remember, this is a lean period. Usually monsoon and winters are seasonally weak quarters. Despite that, we have seen a 25% growth. And small appliances category, where Voltas is trying to make inroads, which is air fryers, chimneys, hobs, fans, water heaters. There also Voltas saw 15% growth coming in. This is on the demand side. If you talk about margins, the management says that the cost inflation has been calibrated in a way that price hikes are taken slowly. The customers are being able to absorb that price hike. So that is happening in the marketplace. Most importantly, the UCP segment is growing at a 56% growth rate when it comes to the first half of this financial year, and the growth will continue. As far as window and split ACs are concerned, the 5-star category, which is a premium category, is witnessing good growth, which will keep the margin slightly buoyant. So overall, a good commentary coming in for Voltas, but the stock has moved nearly 70% plus in the last 12 months. So some bit of profit taking, but the demand outlook is more assuring when it comes to Voltas's air conditioning business and the consumer appliances business.
That's true, Yatin, but I think what really spooked the street was the fact that on a quarter-on-quarter basis, I think the company saw some bit of a drop, in terms of profitability as well as revenue. I think that's why on the face of it, we saw, such a sharp drop coming in share prices. But of course, the assurance from the management really, played out, and the stock, managed to recover from the day's low. But the other stock that's on my radar is L&T, given the fact that the company will be reporting its numbers anytime now. It is expected to be a subdued quarter for L&T, given the fact that, if you look at the operating profit, margins, ordering activity, all of these things are going to take a toll on the numbers for L&T. Profit is likely to remain flat at around 3,180 crore rupees or thereabouts, compared to a little over 3,200 crore rupees in the same quarter last year. Revenues may grow 12% on the back of strong execution. But operating margins that have remained under pressure for the company for quite some time, right? They are also expected to drop by over 300 basis points and are expected to come in at around 10.6% or thereabouts. Q2 is also likely to be subdued on the back of high cost pressures. We've seen a flare up in commodity prices, right, which is what may impact the company's bottom line growth as well. But strong core revenue growth could be something to take heart from, given the fact that domestic execution has seen a pickup. Now, there are concerns relating to weaker than expected domestic as well as international orders as well. Although the workforce is expected to stabilize post-elections, continued project execution in the Middle East is also one factor that could play some part, because I think internationally Middle East is one of the core areas where L&T bags a lot of orders. So execution there is also something that will be watched out for. Revenue is expected to remain strong on the back of strong order book, but the pace of ordering that has slowed down, right, and which is what the street is concerned about. And two of the brokerages, global brokerages, have already downgraded the stock in the recent past, the recent one being UBS, because they believe that market always rewards the L&T for order flows rather than core earnings. So that's one point, and which is what the street will be watching out for. And also the fact that there could be some bit of revival in domestic order flows post the election overhang, right? So yes, but although the near-term performance may be influenced by narratives around state elections as well as the Middle East tensions as well, that could also play a role. But in terms of what to watch out for, FY25 guidance in terms of revenue as well as order inflows, projections on the domestic order growth and the Middle East capex plans, as well as insights on reported labor shortage and its impact on project timelines. So these are some of the factors that will be watched out for. But overall, a subdued quarter expected for L&T. And if you look at the stock price also, I think on a YTD basis, it has given negative returns.
Absolutely. L&T, the earnings to be watched out for, and the kind of business in domestic market and the Middle East, especially Saudi Arabia, is something that will be a key monitorable apart from the earnings.
Well, that's correct. Well, those were all the stocks that were on our radar this afternoon. One more session to go before the Mahura trading session. So let's see whether the bulls manage to make a comeback. Today, all the attempts proved to be feeble. We didn't really manage to end in the green, but let's see what happens tomorrow. Tomorrow is a new day, as they say. But I think with that, we've come to the end of this edition of Closing Bell. Thanks a lot for watching. Of course, come back and join us tomorrow again at 9 a.m. on Opening Bell. Till then, have a great evening.